Volatility hitting a fever pitch this month, and it's been a wild, wild ride for pot stocks. Aditi Roy's in San Francisco with the details. Hi, Aditi.
Hi, Melissa. It's been a roller coaster for many pot stocks this week, adding an exclamation point to an already volatile month after the sector had a months-long rally leading into Canadian legalization. So far this year, through September 30th, the major Canadian exchanges had 18 new listings, and the two exchanges had a total of 43 listings with a combined market cap of 47 billion Canadian dollars. That is, of course, the cannabis sector. Here's how some of the top companies in that area are doing. Canopy Growth shares on the big board ended the regular session in the U.S. up more than 8.5%, but the stock is down more than 23% month to date, on pace to break a 2-month win streak with its worst monthly performance ever. The stock is up 20% since it started trading on the NYSE. Tilray shares also ending the regular session up about 5%, but it's down 32% month to date. The stock is up about 468% since its July IPO. And Aurora shares rising 11% in the regular session, but the stock is down 29% on pace for its second worst month ever. It is down 21% since it went public on the NYSE last week. It's also been a wild ride for Curaleaf, which just went public in Canada on Monday. Shares, which were initially offered at 11.45 Canadian dollars, took a nosedive after the company went public on Monday. They have rebounded since. The stock ended today's regular session up just short of 10%. Meantime, GMP Securities put out a note on the company earlier this week saying with its multi-state platform and production base, Curaleaf has, quote, emerged as the new industry leader among public U.S. cannabis companies. Melissa, back to you.
All right, Aditi. Thank you so much, Aditi Roy in San Francisco. For more, let's welcome the chairman of Curaleaf, Boris Jordan. Boris, welcome to the show. So you're a vertically integrated cannabis operator here in the United States that listed in Canada. So that effectively means what you do everything from grow to distribute?
That's right. We in every state, because of national federal regulations, we have to both grow it, we have to manufacture it, we sell it, we can't interstate traffic.
It has to stay in the state.
So it's a silo in every single state. It's mandated by both federal and by state laws.
If there were federal legislation legalizing cannabis, what kind of switch would be flipped for your business?
I think it would, it depends on what kind of legalization you have. There's two legalization laws on the docket now. One is called the States Act. It's the Warren Gardner Act. That one, really what that does is it keeps the state structure in place. It doesn't reschedule cannabis from Schedule 1, but it allows federal banking, federal markets. It gets rid of the sort of the 280E tax structure, but allows this. It's a federal law that allows the states to make their own determination on cannabis. The other one is full rescheduling. I think we're just not there yet. I mean, I just don't believe the Trump administration at this point in time is prepared for full rescheduling.
For the first scenario, then, for the states, what kind of switch would be flipped if that were to come to
I think that would the main thing would be it would allow companies like ours to raise money in the U.S. and U.S. capital markets. I mean, the biggest travesty is that we're a $4 billion company that had to go to Canada to raise $400 million. We couldn't do it in our own market. Whereas the Canadians can not only raise money in their own market, but they can come here. And you really have to differentiate between the two. And that's the one thing I think people don't recognize. I was just listening to the report. I mean, Canada is a market of 36 million people. We're a market of 320 million people. So the volatility that's happened in the last few days, to be honest, should have happened because Canadian stocks were overvalued for the market size that they're in, right? I mean, there's no justification, in my opinion, for the types of valuations we've seen in these Canadian stocks. And it's because they've had little small floats and a huge amount of demand. Whereas the U.S. companies are much better valued from a earnings perspective. I mean, the difference is U.S. companies are all making money, and U.S. companies are growing at 100 to 300% a year, whereas the Canadian companies aren't even generating real revenue.
Shouldn't there be a discount to the valuation for a U.S. company if you don't have cannabis federally legal? I mean, you're operating with handcuffs on versus the Canadian companies, which have full legalization on the recreational as well as the medicinal use.
So you would think that, but in fact, it's absolutely the opposite. So the problem with the Canadian market is that the Canadian market is the sales points are controlled by the government, and the government wasn't ready for the launch on October 17th, and so the stores all ran out of product, and the government doesn't have enough stores open to service the public. Whereas in the United States, all the companies control their own distribution.
Right.
And so that's why we have much more different revenue profile than the Canadians do.
Boris, great to speak with you. Thank you, Boris Jordan. Where are the valuations now?
Look, this company trades significantly cheaper to the mega caps in Canada, mega cap being a relative term. And bottom line, U.S. deserves a premium, frankly. It's the biggest market. There's the highest concentration, the highest density. And what's interesting about Curaleaf is these guys, we talk about store openings for Starbucks in China. This is an emerging market. It's a new asset class. These guys are opening stores in multiple states right now. And that leadership advantage, I think, is one of the reasons why they probably deserve that valuation premium.